If you're an American living in Europe, you may quickly find that investing is not as simple as buying the same ETFs you used before. MiFID II can block access to US ETFs, and European brokerage accounts may not want US-connected clients. Your US brokerage account can quickly become difficult once you live abroad. Today, Austin Davidson shares how he kept investing from Germany, with Blair Hoover helping us break down what other U.S. expats can learn from this process. Welcome, both of you.
Hey, thanks, Ariel. Glad to be here.
Okay, Austin, I'm going to start with you. So before we get into any of the solutions, I really want to start at the beginning. You are an American living in Europe, in Germany right now, so you're in Europe. At some point, I'm guessing you tried to invest and something just didn't work. Can you talk us through what happened, and when was the first moment that you realized that the same rules that applied to you in the US were no longer going to work?
I came to Germany in 2018, and at that moment, I decided to open an account with a brokerage that was more accommodating to my new European address. And they told me, good thing you've joined us here in 2018 because we can help you until next year. And then in 2019, these new regulations came into force. So I had this kind of warning that I could invest immediately, but in a month or two's time later, I wouldn't be able to. And that, I pulled the trigger on a few classic broad market, US market ETFs. And then suddenly I got stuck and faced this, let's say, gap of wondering how to really move forward. And I didn't know what to do. I had talked to some friends and had ideas about I could do some single stock investing, or I could, of course, invest in real estate or something. But the classic investing shares that I had been planning to do and continue, suddenly I couldn't do. And that really threw me for a loop for years, to be honest. I was sitting on the sidelines for a long time.
Wow. So you actually knew. Did you open your account with Interactive Brokers then, or which?
That one was with Schwab.
That was with Schwab. Okay, so Schwab was the one who sent you the notice, hey, MiFID II has gone through, and now there's going to be these new regulations for you. So you were kind of like, maybe more aware than even people who are now moving to Europe, and these regulations are already in place. That was kind of already happening. Blair, I want to pause for a second and just talk about MiFID II and kind of what were those EU regulations that came into place in 2018 that really changed U.S. connected individuals' access to buying and selling U.S. ETFs with a European address.
Yeah, I'm really glad you said that, because I was just itching, because we use a lot of acronyms and they can be really difficult to translate for regular people. So MiFID II stands for Markets in Financial Instruments Directive. It's an EU regulation that regulates what brokers can sell to retail investors. And the part that really affects us is that one of the rules says that a broker cannot sell a packaged retail and insurance-based investment product, so like an ETF counts under that umbrella, can't sell it to a retail investor without a document called a key investor document. So there's another regulation called the PRIPS regulation, which says that all packaged retail and insurance-based investment products, these are PRIPS, they need to have this document called a KID. And that document is a simple form that explains the product so that a normal person could understand it. The trouble with that is one of the requirements for that form is a projection of future returns. And in the US, we have a different set of regulations. So US fund providers like Vanguard, for example, in the US, on their US funds, they are not allowed to give projections about future returns. So the US market of ETFs cannot provide the document that the EU market requires. So this means that any European resident, whether they're American or not, cannot buy a US domiciled ETF or other financial product. They can only buy EU domiciled financial products.
Yeah. And this is really the whole catch-22. And this is where we see that U.S. connected investors are more harmed than their European counterparts, or just anyone without a U.S. passport or U.S. visa status, right? They're really harmed because on the on the European side, these people can still go and access a lot. They can access European Vanguard funds. They can access all these great low-cost diversified ETFs on the European side. But the issue for U.S. investors is, well, now we have to consider the U.S. rules, right? And now we're looking at foreign investments because they're all EU-based investments. Even if they're trading the S&P 500, their tax accountant may say, well, this is going to cause issues and we're going to have this, next level of tax compliance that's going to cost you $500 a form every single year for every single investment that you have. So we are really, really harmed by these regulations and the mismatch of regulations between the two sides. So, okay, Austin.
Can I add one?
Yeah,
can I add one thing? Sorry. I just want to point out that if you're not American, if you don't have a U.S. green card, then you can just buy EU ETFs, like what you were saying. So the rest of the world is fine. It really only harms Americans, which I think is why it hasn't been addressed since 2018, because we're a very small slice of EU residents. There are a lot of Americans, but relative to the population of Europe, we're very small EU residents. And it's really the US tax laws that are the problem. It's actually the EU regulations are fine if you're not also subject to US tax laws.
Yeah. And then this goes back to, we have citizenship-based taxation, unlike the rest of the world. So again, even if you were outside of the United States, but you are a U.S. green card holder, you are a U.S. passport holder, you are still tied back to the U.S. tax system. And that's really that's the crux of all of this. Okay.
And those rules are restrictive on Americans anywhere in the world.
Yes. Yeah. And it's important to note, so these are not coming from your U.S. custodian, because I think there's a lot of misinformation out there, like, oh, it's my U.S. custodian that's making these rules. And that's actually not the case. These are European rules, and they're built into, again, to protect retail investors. And I think it's good to just kind of give a definition to retail investors, Blair.
Sure. So a retail investor is just a normal person buying an investment product for their 401k or for their taxable investment account. It's normal people. The difference between a retail investor and a professional investor is whether or not it's your business actively trading investments like a day trader, or perhaps like you, Ariel, you are a financial advisor and you actively, or you maybe even passively, you manage assets for other people, or you give advice on investments. So if you are in the business of investing, then you can qualify as a professional investor and you can get around these laws. But if you don't, then you don't have that option.
Yeah. And the second classification, where some people are able to get around that kind of and have that qualification for professional investor status, is, again, if you have a number of years of experience. So if you work in finance, or you have enough experience that you can show, like you were saying, but also on a asset test, right? So if you have assets more than, I believe, 500,000,
it's actually two of the three. You have to have, I think it's 500,000 US dollars in assets, and professional experience, and active trading. You have to have made a certain number of trades. I think it's 15 per quarter. So you have to have two of those three. So you don't necessarily have to be an actual professional. If you're an active trader and you have a large portfolio, you can still qualify without working for a firm or being registered with the SEC or some local firm. But that is a difficult bar to meet, because you have to either be a professional or an active trader and have a large portfolio.
Yeah. And just to set some background and be a little vulnerable myself, when I was living in Germany, I don't live in Germany anymore. I live in Switzerland, so we don't have the same regulations that we're talking about today. But when I lived in Germany, I was like, let me go on Interactive Brokers and play around. And I met all of the criteria to be considered a professional investor. And I still struggled to get Interactive Brokers to give me that access. It just still seemed like, okay, I'm checking all the boxes. I do all the things. I qualify. in every regard, and you still are giving me a hard time about getting that status. So that workaround did not seem as easy as it should be on paper. So Austin, let's go back to you. You struggled for a couple of years navigating and figuring out what to do. What are you doing with your money at this point? Is it just piling up in an account? Like, are you buying individual stocks? What was the route that you decided to go?
Yeah, so thanks for all that background. I think that's really helpful to frame the conversation forward. I tried a lot of things. Yeah, I kept a larger portion than probably needed in cash because I struggled to figure out what to divert it to, right? And some other strategies that listeners might find online, people recommend just maintain a US address with your brokerage account and don't tell them you live in Europe. And I suppose that could work until it doesn't. But also doesn't give you a lot of confidence to be compliant going forward, because I would imagine brokers don't like it if you don't tell them where you live, right? There's another whole number of other regulations that mean you should be recording your actual current address. So I didn't want to do that. A friend of mine recommended investing in Berkshire Hathaway, which that's a large, well-known investment opportunity company that operates a little bit like an ETF simply because it's so well diversified. And that certainly is one way. And I did spend a little bit of time putting investments there because single stock trading in the EU is totally allowed, right? And then I invested in real estate, which was another opportunity, right? And both of those two, the past few years, haven't performed as well as the US stock market, S&P 500 or classic ETFs. So I made some investments that were complying to all the rules, but they haven't delivered the returns that I really was hoping for or was missing because I could see the shares that I own. That's the other thing that's important to mention. You can hold shares in an ETF when you move to the EU. So I had some shares existing before, transferred them into my Schwab account, and they said, bring them to the EU. You just can't buy anymore. You can also sell them if you have them. So I knew that the growth was coming and I could see the share price increasing. I just couldn't add more shares to my account through a traditional purchase, right? And I think that brings us then to the next sort of workaround that I found and the solution that it took me quite a while to explore. I had come across a piece of advice that said you can trade in options and then you can get shares, and that would still fit the rules, and you could still come to acquire the shares. And I don't know if anybody else listening hears the word options and just starts to clam up, or your eyes glaze over, or you think, oh my God, that sounds
Blair
so risky.
And I are like, oh my gosh, options trading, like that's advanced.
Yeah. It sounds super advanced. And I think, to be fair, it is. And I had a bias with the word, thinking, I'm not a super active trader. I'm not Wolf of Wall Street guy, like leveraging hundreds and thousands and millions, and just scared, right? So the word options, somebody said it, and I just immediately shut down and drew a wall and thought, no, too rich for my blood. I'm not interested. And I just immediately closed the window and thought, not even gonna explore it. I'll just spin my wheels with too big of a cash pile, shares in a couple investments, my apartment investment, which hopefully is increasing. And I just sort of treaded water for a long time. And then earlier this year, I don't know exactly what the inspiration was, but I thought, I'm going to invest the energy to learn what options are and how they could benefit me. I think I came across one post on a forum somewhere that laid it out a bit more starkly, and it just said, you can do this with options and in a very simple way that is the most basic options strategy. So I pursued that a little bit and got a response. And then I went on my own journey to educate myself about options. And that's really kind of the tricky thing. There is so much information about options on the internet, on YouTube, on forums. And I had to be very careful what information was going to be helpful, what was not going to be helpful. And I spent months, weeks maybe, just all day long watching a lot of different videos, reading a lot of different information until I found a level of comfort with the strategy that would help me get there. I think now we just have to sort of dive in with 2 feet, right? I mean, there's no easy way to go about it, but I'll describe how I approach options, and let's see if that
Before
helps.
you
And jump
do
in
that,
if you need to.
I am curious, were there any books or blogs or YouTube channels that really stuck out to you as a resource? Because if there are, I want to make sure we share that with our audience today.
I have a couple links out and I'll share them with you. I think you could put them in your notes. And I think that's a really important moment to start. The first thing anybody needs to understand about options is that the vast majority of content that you'll find is about the options market. And that's its own kind of separate universe from the traditional stock market and trading shares or buying ETFs that many of your listeners might be familiar with. Options, I learned, are about, in many cases, not even the shares themselves. They're about, it's like a meta layer existing separate from the shares. It's about speculation on the share price, and it's about leverage. And people trade options contracts purely to trade the options contract. And a lot of the content is framed around this kind of behavior. And that's the first thing to kind of keep in mind. We need to find the way to use the options world for our benefit as a American connected EU investor without getting overwhelmed by the content that is really about the trading of options and the leverage and the speculation and what a really professional trader is doing, right? We use options in this case as a way to get the result we want without needing to get into the wider complexities. So yeah, I do have some links. One is called optionseducation.org, I think. And of course, we can put a link in the description. This lays out very specific options strategies in a very, let's say, non-biased, straightforward, fact-based kind of way with different strategies. So let's talk about strategies. The goal for us in this case is just to acquire shares. And then a lot of people are trading options to maximize upside, or they want to make a bet on the growth or shrinking of a stock price in 1 month or 1 year or 6 months or 6 days or whatever. But all of that is beyond beyond what we're trying to do. When we're just trying to acquire shares, we have very simple option strategies that we can execute that can result in what's called share assignment, which means you get to acquire the shares. I watched a few YouTube channels, and there's really only one that I'll recommend. I don't have the name on the top of my head right now, but we'll put it in there. And again, I think the thing to be careful about is you very quickly get into a huge library of content that can be overwhelming. So I want to encourage your viewers, listeners to research, read, watch, and after maybe a month of that, then you find the nuggets of gold that can help lead to the result.
Okay. Curious on the actual mechanics behind. So you did a lot of learning, which is really important. Sounds like you were fairly skeptical, which I think a healthy bit of skepticism is like really important when you're learning a new trading strategy, right? I think that's really important. But tell me, did you continue to do this on Charles Schwab? Did you have to change to a different custodian? And then walk me through like what that first trade is. I mean, I'm guessing you took baby steps. You didn't just start with, I'm going to start with 100,000. Talk me through like what that looked like.
So some of the content that I found on YouTube showed trading strategies demonstrated, right? Not live trades, but they had PowerPoint or like screenshots of what a trade looked like on a different platform. It wasn't Schwab, but it sort of gave me a sense. I watched a few more videos and I started to build a picture that the options screen with the brokerage looks pretty similar. And there's these things called calls and these things called puts, and there's a strike price. And these are the mechanisms that you need to balance to find the way forward. So I watched a few videos of this kind of strategy planning. And then I went onto my Schwab brokerage and I found the options chain for a certain ETF. And then it has a price. And what I was doing is called cash secured put. So let's get very concrete. I think that makes it the most tangible for people who are new, right? An options contract involves the unit and trading of a lot of 100 shares. And that's what I set out to do. It meant that I would, if this works out the way I want, that I would acquire 100 shares of a Schwab ETF. And I chose Schwab ETFs because 100 shares can get pretty pricey. If you talk about ETFs from Vanguard like VTI, for example, I think that's trading over $350, $360 a share right now. 100 shares is a huge amount of capital to have up front. And in options trades, you need to be ready to pay for 100 shares at a given time. Schwab does a really good, they appear anyway. I think they manage with splits a lot more frequently than other brokerages. And their share prices tend to be in the $25, $30, $35 range. So a unit of 100 shares of a Schwab ETF like SCHB or SCHF is more like $3,000 capital that you need to have up front, ready to invest. So that's more approachable than some of the big name, most common ETFs that people tend to think about if they're buy and hold long-term investors. And in Schwab brokerage, you need to, I had to get my account approved for options trading. That's not something brokerage normally just give to everybody. So I had to click a button to apply for that. And there's a short questionnaire. And they have a design system like that to protect you from exposing yourself to very complicated, higher risk trades. But again, as I said before, what we're talking about here is actually quite low risk. It's not any different than buying the shares themselves. What we talk about here is the mechanism that you get the shares. And, it strikes me now, we didn't really speak about why this workaround works, right? The regulations, Blair, that you described before say you can't buy shares because those ETFs don't publish the right document, right? But the regulation is about buying the shares. It's not about owning the shares or acquiring the shares. And that's a very weird, subtle distinction. But this trick works because if the options contract executes, then you will get the shares and you come to own them, but you didn't exactly buy them. You've paid for them, but you didn't buy them directly. And that's the workaround that makes this possible.
I will add in that the regulation is actually not on the consumer. The regulation does not prevent you from buying. It prevents the broker from selling. So this gets around the regulation on the brokerage side because the broker is not selling that ETF. The broker is selling the options contract, which results in the ETF being acquired. Yeah. But that's why it works, because the regulation is actually not on you, which is why you can still own it, but you just can't get it from a brokerage because they can't sell it.
Perfect. I mean, I was glad that it was working, and I'm happy to learn the additional reason why. So in February is when I made my first options trade, and then I dug into the details on what's called a cash secured put. And I think the ETF at the time had a strike price, or I chose a strike price. That's the thing. When you sell or buy an options contract, you need to decide at what price you want to pay for those shares. Right. And I think it was $25 or maybe $26 back then. And that meant I needed to be prepared to buy 100 shares of that ETF at $100. And I sold what's called a cash secured put with Schwab. They checked that I had $2,500 in my account. And I choose a date. So you need to have an expiration date that's in the future. And the brokerage makes all of this transparent. It just takes time to sort of piece together all of the details. So future execution date, a strike price, and then what happens in the market is there's another buyer on the other side of that transaction. An options market links buyers and sellers. So I was selling a cash secured put, and that means somebody is also buying on the other side. And that means they pay what's called a premium. And that premium is related to the difference between the strike price and the trading price. And I think it gets super complicated to describe this without a trading screen in front of us. But that's the mechanism. And then that meant that I received a small premium, maybe $100, $200, to compensate the difference between the price I was willing to pay, which was slightly higher than the market price. And that means the trade will execute because the person on the other side of the transaction, they are happy to part with the shares for a price that's higher than the market price.
So you set your strike price higher than the market price.
Right. So I think maybe again the reason you kind of have to do that because the person wants to part with their shares they will part with their shares when they make money, right? Mm-hmm. And in the options language, this is called in the money, and it means that the strike price is higher than the market price. Means they should be happy to sell me the shares for $25 if the market price is only $23. Right? That means I kind of overpay for the shares. And
wow, I feel like we could go on and do like a part 2 on this because there's so many things to think about with the terminology and then the actual process and completion. I am very aware of our time today, and so I want to be respectful of that. And just kind of jumping to our last question, Austin. If you had known all of this complexity when you were moving into Europe was going to exist, would that have changed anything for you in the process of kind of the pre-planning moving?
Yeah, absolutely. I took the plunge with that first trade in February on 100 shares of that ETF, and now we're in June on the day that we record, and I've done the same thing now 4 or 5 times, and now built a position more like 700 shares of that ETF and in just a span of a few months. So I've been slowly, carefully deploying the cash that I had on hand, to rectify my water trading, right? Treading water on all those ETFs. So had I invested that few weeks of learning and YouTubing and reading 6-7 years ago, I would be in a very different position today because I would have participated in the growth of the past years and I wouldn't have felt so sidelined, I think, right? So it would have been a big difference had I made the plunge a few years ago.
Yeah, which is, I know that so many people in Europe feel sidelined, right? Because they are not meeting asset management minimums. They're too small. They're just getting started. And again, they are this catch-22 of like, we can't really do anything. And Blair, you and I worked on a book called The Expat Money Playbook. And we've got 2 chapters on investing. And we talk about the Berkshire Hathaway. We touch very briefly on kind of options. But I just want to throw that out there because we talk a lot about all the gotchas that you need to know about before you move into Europe or before you move abroad, right? Every country has different regulations, different tax considerations. All of those things need to be thought, like just be more aware of them. You don't have to plan out everything exhaustively, just to be aware of what is going to potentially happen, especially as your net worth grows. It becomes more important that you understand these things. Okay, on that note, I'm going to say thank you and goodbye to both of you for joining me today. And we'll have to do a follow-up episode to this because it was really good.
Sounds good.
Thank you.
The content shared in this podcast is intended for informational and entertainment purposes only and should not be considered financial, tax, or legal advice. We encourage you to consult with a qualified financial advisor, tax professional, or other licensed expert before making any decisions based on the topics discussed. Everyone's financial situation is unique, and personalized guidance from a trusted professional is the best way to ensure your choices align with your individual goals and circumstances.